Hey guys, welcome back to Bitcoin Math. My name is Shane, and today we're going to cover the Bitcoin life insurance model. If you're not familiar, the big idea here is that Meanwhile and others that are getting into this space have developed Bitcoin life insurance policies that are denominated in Bitcoin instead of dollars. And you might wonder, well, how does that change things? What does that do? Well, if we come over here and we look at this chart, we have a couple of lines, one of which is the purchasing power of the dollar in blue, and one of which is the spot price of Bitcoin in that purple color. You can see that one is going aggressively down, meaning it's losing value in its purchasing power over time, and the other is going up dramatically. And if we zoom back all the way to really the beginning of when this data started being tracked in 1913, well, the trend is pretty ugly, right? Dollars are losing purchasing power every single day because of the amount of money that continues to be created through bailouts, through funding wars, through monetary debasement and printing and continued fiscal deficits and all of the things that we're all well aware of. So the reason why this is important is because, well, if your risk models and all of the mathematics and economics and other things that you're using under the hood to determine the economics associated with your life insurance products and the policies and things of that nature, well, then you can structure a lot more upside and benefits in for the insured and their ultimate beneficiaries because of the asset that underpins the life insurance policies themselves. And that's really the underlying premise here is, well, what if Bitcoin or what if life insurance was denominated in Bitcoin, an appreciating monetary asset, as compared to this depreciating assets or monetary asset, if you will, in the dollar. And so that's what we're going to look at today is a simplified view into some of the long-term benefits and the bigger picture ideas here of what happens when life insurance policies are denominated in Bitcoin as opposed to dollars. So we've simplified the model here, and in working with Meanwhile and working with some of their analysts and collecting a lot of data that they were kind enough to provide, we were able to come up with a more simplified view into some of the long-term implications here. And we've made it easy for you to go in and actually configure your specific demographics, your respective gender, your age, and then, of course, what you believe the inflation rate will be for the next 20 years and what you think the Bitcoin growth rate will be for the next 20 years. Now, in order to make this simple, what we've also done is we have compared a traditional life insurance policy that has a $1 million death benefit to an entry level Bitcoin policy that has a zero point 0.1 Bitcoin premium cost per year. Now, as you key in some of these inputs, a couple of these numbers will change, which I'll show you here. If I say I'm a male and I'm aged 40 to 44, well, what just happened, right? The death benefit went down and the TradFi annual premium went up, right? Because I'm still paying the same amount in my Bitcoin policy no matter what, but the amount of my death benefit is going to go down as my risk goes up. I'm a male, that means more risk, right? If I change this, then all of a sudden my death benefit goes up, and you can see my TradFi annual premium also goes down. So as you key in different inputs here, those two numbers will change, right? The death benefit goes up on the Bitcoin side because the risk goes down. And because the risk goes down, so too does the cost of the TradFi policy. But that is set at, again, a $1 million payout. The Bitcoin death benefit numbers will fluctuate, but the total input, the cost, the premium, will remain the same. Okay? So once you've configured your respective demographics here, you're also going to key in your estimated inflation rate. I'm going to go ahead and say 3%. And then we will say, okay, what do we think Bitcoin's compound annual growth rate will be for the next 20 years? If you're not familiar with our models and what this CAGR bar is, the icons are Sailor's bear, base and bull case, bear case being 21%, base case being 29%, and bull case being 37% compound growth annually for the next 20 years. Sorry, dog was snoring. So if you want to look more at the CAGR bar and what that means, we have an FAQ here. You can also look at the life insurance, like what's all happening here under the hood, show me the math, show me an example, things of that nature. The other thing you can do is you can get a little bit more detail on the CAGR bar, kind of what that is and what some of those icons represent. Okay, so let's go ahead and run this model. Just for simplicity's sake, I'm going to go ahead and say Sailor bear case 21%, and voila. So there's 3 columns that we're going to look at here in the chart. Number 1 is the total premiums paid. Now, because we are paying in Bitcoin, we converted the Bitcoin value into USD value based on the then spot price over the 10-year period. So by doing that, we can see that over the 20-year period, if I'm a male age 40 to 44, non-smoker, we also assume non-smoker, I will have paid $367,000 in premiums for my traditional policy, and based on a 21% compound annual growth rate for Bitcoin, I will have paid a roughly $305,000 dollar value in Bitcoin into my Bitcoin policy. Another unique thing here is that the Bitcoin premiums are only paid for the first 10 years, right? That's a very interesting nuance to this kind of a policy, because the traditional policy pays for the entire 20-year period. You can see that here, the premium goes all the way through year 20. Whereas on the Bitcoin side, I'm only paying 0.1 Bitcoin for the first 10 years. So even if I converted that Bitcoin value into dollars based on the spot price of Bitcoin using my compound annual growth rate, well, then I will only have paid roughly $305,000 worth of Bitcoin, right? And yeah, you can say, well, what's the future value of it? And well, but did you pay more if the price goes up? Think about it like this. You took this amount of dollars and you bought this amount of Bitcoin in year 1, and that's what it cost you to pay your policy. In year 2, Bitcoin was worth this much, so what did you do? You spent this much money to acquire this much Bitcoin to pay your policy. In year 3, Bitcoin's price is here, so you spent this much dollars to buy this much Bitcoin to pay your premium. Come down to year 10, Bitcoin's worth 622 grand. You got to pay 0.1 Bitcoin into this policy. So you spent 62 grand. You bought 0.1 Bitcoin and you covered your premium for that year. So roll all of that up, and what do you have? Well, you spent $305,000 to get this Bitcoin powered life insurance policy, but that's it. You're done paying into this policy now. Okay? So that's how we get to this number here. Now, if we look over at the surrender value, right? Let's say after 20 years, the insured is still going strong and healthier than ever, then you say, look, I'm going to cash in the value of this policy. Great. Well, it's estimated that the TradFi policy will carry a value of roughly $118,000 in surrender value, whereas your Bitcoin surrender value will be worth roughly $2.3 million. Well, how is that possible? Well, because in year 20, your surrender value is actually one whole Bitcoin. And if one whole Bitcoin is worth $4.18 million, after accounting for inflation, 3% per year for 20 years, well, that $4.1 million in Bitcoin value buys you roughly $2.3 million worth of stuff. Now, comparatively, we have an estimated surrender value of $212,000 on the TradFi policy, which after 20 years only buys me $117,000 worth of stuff. A dramatic difference. right? This is roughly 1/3 of what I paid into it, right? So after 20 years of paying $367,000 nominally into this policy, well, if I take the surrender value, well, the value is only going to buy me about $118,000 worth of stuff. Comparatively, the surrender value of my Bitcoin policy measured in dollars after inflation buys me what is that? Between 7 and 8x what I paid in. It's a significant ROI on my investment, right? This is a pretty significant loss on my investment. This is a significant gain on my investment, and it's not even particularly close. Now, if we look at the death benefit, same thing, right? The policy is triggered, the insured has passed away, and my TradFi policy, let's see, my death benefit has gotten all the way up to $1.3 million. But after 20 years of 3% inflation compounding, well, that $1.3 million only buys me about $733,000 worth of stuff. Okay? Now, on the Bitcoin side, right, my death benefit is 1.631 Bitcoin at a spot price of $4.18 million. That means I am being paid out a death benefit of $6.8 million in Bitcoin USD value, which after accounting for inflation buys me roughly $3.78 million worth of stuff. Again, a dramatic difference from the TradFi policy, and a dramatic increase. Like, I mean, that's over a 11x multiple than what I paid into this thing. Right? I paid in roughly $305,000, but after 20 years of taking the claim on this and being paid out the death benefit, well, my assets I'm being given are worth close to $3.8 million. Okay? So that's how this works. And if you change all this stuff up, if you think Bitcoin's only going to do 10%, then everything changes, right? If you think Bitcoin's going to do more like a Sailor base case, well, again, everything's going to change. Same with the inputs, right? If you're younger, well, then this is going to cost you less, and the KPIs and the values will change, as too will the values change as you fluctuate the compound annual growth rate estimates, right, and things of that nature. I encourage you to hop in here, play around, toggle with the different values, see if this makes sense. If you want to learn more, we do have our partners over at Meanwhile ready to do one-to-one consultations with anybody to see what this looks like for you specifically and how to take those next steps. You can also reach out to us if you have questions. You can fill out the form here. We're happy to engage and answer those questions high level and get you connected with our partners over at Meanwhile. Or if you just want to leave general feedback, we make that easy for you to do here as well. Let us know your thoughts. If there's ways you think we can make this better, or if you just want to share your overall feedback, we'd love to hear from you. And with that, thank you so much for your support, and we will see you on the next one.